Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, November the 9th, 2023. I'm going to begin with the S&P, the futures market, and I'm going to begin on the 4-hour chart. Today actually ended up being a very interesting day because the early session, the morning session, did start out very strong, again, with buyers coming in or money coming in to parts of the Magnificent Seven, as they call it. And that would have been NVIDIA and Apple primarily early on. And then Meta and Microsoft also caught some bids early in the session. That did eventually push the S&P up to an additional new high at 4413 here. And again, we had resistance at 4410, so it got a little bit above that. And that was actually the 0.618, where we were thinking it's like, okay, if this is going to be this fifth wave, again, within the C wave, that 0.618 would have been the absolute minimum, with that 100% or the equality actually coming in above at 4432. Now, a couple of things going on. I am going to leave this as an ABC. So, but I'm putting a minor wave A up there, and that we're in at the beginning stages of a minor B wave decline. Now, remember, larger wave in progress would be an intermediate second wave. Now, so we're looking for an ABC total, but that would be minor degree ABC. So this would be ABC, but on a minute degree to put in a minor A wave. However, we're going to keep a very close eye to see how this all develops, because the Treasury auction, the last of the Treasury auction, which was the 30-year bond auction, was today. And from what I can see, it was not good. In fact, it was not good. Let's just say it was not good. $24 billion actually got auctioned of 30-year notes, and just under like 4.75%. And I'm not really sure, because I don't remember reading what the actual expectation was on the amount. But this was the most important to actually witness, because this is the 30-year bond is where the largest participation from international and other sovereigns and a lot of long-term bondholders will come in and participate in the 30-year bond. And with all of what's going on in many places around the globe, and particularly here in the United States, the interest in locking up money for 30 years has diminished substantially. And that then got really read into today. So I didn't mention it yesterday afternoon, or I may have on yesterday's update, and that we had the 10-year, and now we had the 30-year, and that was going to come out today. And so all eyes would again be on the bond market to see how this 30-year would go, because last time it did not go well, and it produced a similar reaction. So here we have it. So now what I'm going to be really looking at is that, because at the same time we had Powell speaking, and I believe it's part of the IMF. There's some big conference going on. And so I believe that what got put then is he got put questions in a press conference, and it was left at that, well, the possibility of higher rates now is back on deck, in the forefront, and that the possibilities that interest rates will again be hiked. And so that kind of tossed a lot of cookies just right out the window, and everybody started really kind of just getting very quickly selling the markets, selling the bond, selling the 30, selling the 10, selling the 5, selling the 2, etc. And the S&P did start to take a pretty serious tumble. I'd have to go back and look in pretty cleanly, which I can do here on the hourly chart, and say this is pretty much 8. Yep, that's 11 right there. So this is like when that auction news is coming out. So initially it came out and the market dropped. Then they decided, well, that was okay. We'll live. And they actually came in and they started to buy everything back. And then we get that up to about the 11 o'clock hour. And then the sellers just hit the market. And I believe it was after Powell made his comments during a press conference. So again, what did we also see here on the hourly? We saw that the S&P came in and broke the 100. This is a simple moving average, but it broke. And then we got some additional acceleration with a little bit of buying right there in the after into the last hour. And there's still a little bit more stabilization covering, whatever you want to call it, taking place here in that extra hour that they get at the end of the day. Now, what could all this be? Well, I'm just going to open, come on, get out of there. I'm just going to see if I can open this up a little bit more. There's the high, 1, 2, 3, 4. So yes, I am going to be counting. I'm looking to count a B wave. So what can we really start to look for here? Well, a B wave can be A, B, C. A wave can be 5 waves. So if I get a 1, 2, 3, 4, 5, is that going to be all of A? I don't think so. So this gets very interesting right about now. Because now I'm going to watch the development of this B wave. I could get a very quick 5 down, maybe to here, and call it wave A. And we get an A, B, C zigzag. So again, we're confronting our same situation is how is it all going to unfold? Being that this unfolded in its own ABC, not necessarily signifying that it would be a zigzag, but I'm going to leave it as an ABC because of how it began to unfold in the beginning. This is turning into something a little bit different. Right now, it can be considered 1, 2, 3 or ABC, but so we got a lot to be looking for and a lot to kind of pay attention to, particularly tomorrow, and then again into next week. So how I'm going to leave it, I'm going to leave the count just as it is. ABC, primary A. Excuse me. Boy, aren't I way ahead of the game. Minor degree A. So that was a big faux pas. A minor degree A right there. And now we're in a B wave. So here are the fibs for that B wave. B wave's 50%, 62%, but very similar to a second wave. But depending on the size, and this one's fairly decent. It's a minor degree. So I'd be looking for it to come down to 42.67 to 42.33, somewhere in there. It's going to find some nice support right around the 200, simple moving average. A quick break through that will produce another round of acceleration to the downside. Now, here's what I'm looking for. As I'm looking for if it turns into a larger 5 waves down, and it turns into a larger, again, 5 waves down, and we start to break below levels where the market should not go. Unfortunately, it's going to take quite a long break because, again, being a B wave, it can come all the way back down as close as it wants to get to this low. And it's an ABC flat. A, and then the B, and then the C, and it all can end up within a box, so to speak. You know, that the A wave and the B wave doesn't exceed, stays within those parameters, and a C wave does pretty much the same thing going back up. So again, A, B, C is still the ticket that I'm looking for, but I'm going to make sure of how this all unfolds now. If we really start to take a tumble, and I mean really start to take a tumble, still could be a B wave, but we're going to be paying very close attention to what's happening around the market. So not only just what's happening in the S&P and the NASDAQ, the Dow and the Russell, but what's happening in the bond market. Bond market kind of came down, picked back up. The 30-year bond was down over 2 at one point and then rallied back. Not a whole lot, but enough to kind of give it some stability, I guess you might want to call it. The 10-year note is what really concerns me more. And I'll talk about that in just a moment, just so that we're all on the same page as to what I'm looking at. So anyway, for tomorrow, I am going to think that the direction should remain down. If they walk in tomorrow morning and they buy this all back above 44.13, I'm not sure how many more times I can extend this, but it would be still a part of that minor A. And I would find it very bold for the market just to kind of continue to go against the grain, because to be honest with you, it really does fall down to, if I hear again somebody saying, gee, the bond market is out of sync with the equity market. It's like, no, the equity market is out of sync with the bond market. The bond market sits at the top of what we look at, right? Interest rates actually sit at that top. We've just now gotten notice that there's a strong possibility that, yeah, no, we're not done. We may hike some more. The demand for the bond was light. Nobody's going to lend the U.S. money for 30 years at these current interest rates. They don't trust us. So what can happen? Things begin to decay. Now, I'm going to add one more thing. I know this is not technical, but this is the reality point. Today is November the 9th. We need to come, not us, the Congress needs to come up with their plan to keep the government open beyond November the 14th. 5 days of which 2 are a weekend. I'm just letting it out. So again, by Tuesday, and the House is not really looking to bring anything to the floor of the House until Tuesday. So what kind of extension do they think they're going to get? What kind of going on? Do we have any idea of what the House is coming up with? I've not heard. So again, looming over the market, looming over the bond market, looming over the dollar, etc. There it sits, the big bad word, shutdown. So again, everybody wants to think, oh, never going to happen. It won't happen. It's like, please don't give the market a hint that something really nasty is going to happen, because they will react. So again, I would be a little bit surprised to see the market just ignore it all, as they did at one point for a little bit here, just said, no, we're just going to buy it all the way back up. And that was not the correct thing. So again, it's expiration tomorrow as well. So it is a Friday expiration. So all of the components, they all got options and they all expire on a Friday, plus the dailies, plus the 0 DTEs, et cetera, et cetera. So tomorrow is an expiration. Now, I'm going to be looking for this to continue. I'm going to be paying very close attention to the structure. I want to see how this structure is going to develop on its way down. We're looking for the development on a minute level of an ABC to put in a minor B wave. So I'm looking for at least as a minimum down to 4,300, and if not 42.67 down to 42.33, with overflow bring about the possibility we drop below 4,200 again. And that's all just in a B wave, and then still leave us with a C wave rally back up. All right, over in the NASDAQ. Now, let me just double check. Let me just take a peek here at the daily to see where these moving averages. You can see that we came back down and we broke back below the 50. We got back above it. Today we broke back below it. It did give us a little bit of like get out of the way and came back down. So that was at 74. We're closing at 65. Let me just double check. Yes, we're closing at about 65. We got 3 minutes. So we're still below. So it's closing below, which does put a little bit of a negative on the daily. And so if we continue to crank below it, we got sitting right here, the daily 200, which is at 43.45. So not a whole lot of room, not a whole lot of downside room before we start breaking below these moving averages on the daily chart and then start to produce some nasty. And guess what? We got below there at 4,300, 43.02 is the 20. So we broke the 50 today. We got the 200, which is flat. So it should provide some support. If that doesn't work and they go through it, then we're down to the 20, which is sitting right at the next level on a fib level at 43.01, with that 20 coming in at 43.02. So if we break that and that, it's going to put a lot of things in jeopardy in terms of the pattern, the structure of the decline. So just keeping all that in mind. Going over to the NASDAQ, the fund market today. So again, I'm out on the daily, which I don't need to stay in, but as long as I'm here, I'll look at the moving averages here. All we did really today was break below the 100, and that was at 15,304. And once we broke that, we sank pretty quick. So again, as I say all along, when we break like the 100, the 50, the 200, at least on the daily chart, it does begin to accelerate that move. And it does. It may take a minute, it may take a little bit longer, but it does end up going back through and continuing to push in the direction that it's getting broken, and that in this case was down. Next up on the daily in the NASDAQ would be the 50. Simple. These are all simple moving average, or the simple moving average at 50 period is at 15,098. So that's over 200 points from where we're going to close this thing today. So again, you think that's far enough? Well, sometimes. And then below that, we do have the 20, which is at 14,907. Now, let me drop this down to the 4-hour, and we're going to take a peek at what this structure is beginning to tell us. Well, pretty much straight down. So we got 4-hour chart straight down. And so here's the gig. I did move it around. So we got the 3, the 4, and then we have a nice 5. This was a little bit strange, but still I left it in there. Give us the 5, the minute C, the minor wave A. So we still got everything kind of showing itself to go higher on the 4-hour chart. And what we got is the 100 and the 200, basically starting to go flat. The 20 swung up and wants to crest and go down. And I believe that if we continue, we will. Dropping down to that hourly chart, we're going to try to give it as much as we can here. It doesn't. 1, 2, 3. You can see 1, 2, 3, 4, 5 red bars on the hourly. So basically, before that number came out, or before the auction was revealed, the market, we were already heading lower. The auction came out, we headed lower, even though here you can see, let me just drop down to that 30-minute chart, open this up. You can see there it is, and then we brought it all the way back. So there's with the auction. The results come out. The market drops from 154 down to 153, and then rallies all the way back to 50,003, basically 80. Get over to the next bar, down, 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 down. So buy it back like it doesn't make any difference. Now, I happened to think when this was going on, these were just the already pre-scheduled orders. I know that a lot of us have to get a little bit, I don't know, my understanding is that a lot of the fund managers and a lot of the different firms, they schedule their orders throughout the day, buys and sells. And when we're seeing just this consistent buying like we did today in stocks like Apple, Nvidia, Microsoft, Meta, etc., against some sells, which were pretty much throughout the entire day, which would have been like in Tesla, there seems to be a little bit of a balance or an unbalance between what's actually going on. Well, Nvidia was actually up like $14 or $15 when that auction report came out. So it kind of did a nosedive along, and Apple was up nicely as well. Kind of came off, but then they just moved right back in and started buying it again. I was like, and bought it all the way back up, and then it was like, oh, okay, thanks. And then it just took a nosedive. So I find things a little bit interesting, and then we'll see how this all works itself out tomorrow. Because, of course, we still have two other time zones, the Asian markets and the European markets, to put in their 2 cents on what they think. Because, they also got to deal with U.S. interest rates on different levels. And also then the European Central Bank and the Central Bank of China and the Central Bank of Japan, et cetera, all coming in and also putting in what they think. Now, so go back out to that hourly chart. Let's talk about the NASDAQ. Very extended, but not by this level. It was kind of going up on divergence, you could say, in the RSI, and also just in volume. So there wasn't like a ton of volume. They just did it. They just kind of went in and grabbed. And when it was actually making these highs, it would just suddenly just pop $10 or $15. And I'm not kidding. And then suddenly, and then come right back down. So it was interesting. But I'm putting it all in minuet wave 5, minute wave C, minor wave A. But here again, ABC, and we actually, this 15,454, I'm going to call it, exceeded, not by a lot, but exceeded that 0.618. So again, if I just move this out one notch and you're going to look, it exceeded the 0.618. It went above this level. No, it did. Yeah, did it? What's that high? That high is 68, 468. So no, it did not, but it's dang close. So because again, remember now, this is both the S&P and in the NASDAQ, the count that I had previously of 121212 is still alive, actually. Now, remember, a wave 2 can come as close as it wants to the starting point of wave 1. It just can't exceed it. Well, if this were to be the case here, I'm not looking for this, folks. Trust me, I'm not looking for it. I'm just stating that where we're sitting, that high is 15,468.75. The high today was 15,453.75. So it has 15 additional NASDAQ points, which basically is nothing for the NASDAQ, absolutely nothing for the NASDAQ, but it didn't exceed it. I would be stunned. I would be stunned if this actually works its all the way through and starts to just collapse from here, leaving this other count, 121212. Because to tell you the truth, even if the intermediate wave 2 is complete up here, and intermediate wave 3 is coming in, or even if it's a minute wave 3, whichever wave 3 we want to discuss, if a third wave is getting ready to begin, and that was the catalyst to kick it off, was that bond auction, then this thing is just going to go, and it should just go, and it should not look back. And I'm not kidding. So in other words, it's like we were down what today? 130 points. Nothing really, because we had some strength in some of the NASDAQ stocks. But all of that could be erased. And if it just goes and it breaks 143 and it breaks 15,000 and it breaks 14,900 and it just keeps going. What if we have a 400 or 500 down day tomorrow? What's that going to do to the picture? It's going to put a lot of threat on the fact that we might be dropping in that third wave. And I'm not really going to declare what degree that third wave is, but this can be easily changed around. 121212, and down she goes. So this would be a little bit bizarre, because I'm telling you, if I put 1212, it did not go above it, but man, it puts such a lot of pressure on this. Because if you look at it and you're just eyeballing it, you're like, wait a minute, it does look like it's above it, but it didn't. But whether it's an intermediate wave 2 up here, an intermediate third wave, which would make it even more severe, or it's a minute third wave. It's still going to be a third wave, and it still should just go, not stop. Don't look back. Don't worry about collecting $200. Just go. So we already looked at the moving averages for the NASDAQ, and on here, we did break that 20. On the 4-hour chart, we broke the 20. Let's drop it down to the hour and take a really quick look. We drop below the 20, we drop below the 50, we drop below the 100 on the hourly chart. So all of that, ding, 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 we should be heading down according to moving averages now, right? The natural step on an hourly moving average is that we kind of keep sliding and we come down to the 200 simple moving average, which is at 14,952. Our fibs come in at 15,143, 144, 14,952-ish down to 950, 14,979. You can take it all the way up to 14,800 if you'd like. Then we have 14,642, 14,421, and then the low. Now, B wave, 50 to 62%. So already looking for it to come down here, but I'm looking for it to come down in an ABC. This is very steep start. Still could be a B wave, so don't get me wrong. I'm just saying my observation right now, it's a very steep start to it, but we're going to see what it wants to do here. And so again, tomorrow's expiration. Now I want to just go over very quickly. I did change a chart, and that this is the 10-year note. Now, initially, I had put a more bullish view into place, and that actually does continue to hold. And that would be that this 4 would be over here, this is a 5, and this is an intermediate wave A bottom right here. And this is a 1, and this is a 2, and this is a 3, and this would end up being a 4. But notice, now this 2 is not small. This 4, it's not that it has to be small. This didn't go so deep. This is going very deep. And that's what throws caution to me, because I really didn't want to see it below here to keeping a more bullish view in place, and that's 107.090. We got as low as 130 today. Now, if this all holds, and this 100 level holds, and this 200 simple moving average on the hourly holds, and we start to rally back, all good. But we need to get back above 107.245, and we need to get above 108.170 and 108.250 to start getting into if I'm going to move this all back, and I got a 1, this is all minuet, by the way, minuet 1, 2, 3, and minuet 4, we got to get above 108.250. In the 30-year bond, it's already done that. It already did kind of produce this different picture. So, and this is the deal, because this is the more bullish count that I'm looking for the 10-year to pick up and go, because it's not going to be like the 10 years going in one direction and the 30 years going in a different direction. That's kind of like saying the SP one and the NASDAQ's going in the other, and they're going to continue to diverge from each other. No, that stuff just doesn't happen, because the same thing affects both. So that was the bearish count, or the bearish view, I should say. And this is the more bullish view for the interest rates. So there we have the 5 and the A, the intermediate A, and 1, 2, 3, 4, 5. So this actually did put that 5 in. So this could be ahead of the 10-year note in that we're getting the A. This is the minute A, so we get a minute B. Still kind of steep, but still B waves can do that. B waves can be a little bit tricky. I'm not really breaking any rules, doing anything wrong here. Comes down in the B, and that B can get us down to 111, 110, and then does a C wave, B wave down, and a C wave back up. And that's just going to be to put in the minor wave A. So I'm hoping that that's going to be the case, because I really think that the bond market is really ready for this a little bit longer and more sustainable counter trend rally. I don't know, whatever you want to call it, but rally phase. So that's kind of what I want to talk about there. And I know I'm just adding that as a little bit of add onto it. So I'm going to end it right there. And again, we'll see what happens tomorrow. Let me look real quick to see what we have in terms of news items, not news items, but just, so tomorrow we have nothing, just a bunch of Fed. Dallas Fed talking, Atlanta Fed talking, consumer sentiment is going to come out at 10 a.m. And then the San Francisco Fed president, they're all talking tomorrow. So the only thing that really anything is consumer sentiment at 10 a.m. Eastern. And that's our Friday. So I am going to wish everybody a very, very great weekend here. Have a great trading day tomorrow. Be careful. It's going to be wild. I think it could be a very wild day. And that the next, I will do an update over the weekend. So the next Elliott Wave update, no matter what, will be on Sunday, November the 12th.